In this video, I want to talk about how the biggest market crash ever seen is starting, how Michael Burry is exposing everything, but how a new stimulus check is about to cause the squeeze. So stay tuned and let's make some money. So let's dive straight in with the key information. So Michael Burry has posted this lengthy post explaining how many AI companies like Nvidia are actually massively overinflating their profits and doing so illegally. So he said understating depreciation by extending the useful life of assets artificially boosts earnings, and it's one of the more common frauds of the modern era. So this is pretty crazy that Michael Burry is telling us he's found a massive fraud going on in the financial system. Now guys, before I tell you more about Michael Burry exposing fraud, I want to ask you a very important question about Lexston Mining Corporation. Lexston Mining, ticker symbol LEXTF, trading on the OTC market, is the sponsor of today's video. It's already up 75% over the last month, and it's gearing up for something big. Over the last few months, mining stocks, gold and silver have been going absolutely crazy as a result of the China trade tariffs and Trump unleashing American energy. Lexston Mining has its flagship project in good old Nevada. It also has a clean structure with zero debt and a market cap of just $4.2 million Canadian. Their primary focus is on the discovery and development of gold, silver, copper and uranium, many of those rare earth minerals that we need. They're the essential building blocks of the AI-powered industrial revolution. Their flagship project is the Garfield Hills property in Nevada, and it borders some incredible claims from Sky Gold, Nevada Canyon Gold and Guardian Metals, so it sits on trend with multiple active discoveries. Lexston Mining is currently budgeting for a Phase 1 exploration program, so it's an early stage junior miner, positioned as a discovery stage growth story and a potential consolidation target, as it sits in an acquisition hotspot. So it's one not just to keep on your radar for tomorrow, but for the long haul. So guys, do you think Lexston Mining, with their flagship project in Nevada, could be the next big deal? Be sure to let me know what you think in the comments below. And be sure to research Lexston Mining trading on the OTC market under the ticker symbol LEXTF. So let me break it down and explain what this actually means. If you didn't know, I've got a background in accounting. Unfortunately, not the fun department making deals or working in private equity, the boring old audit department reviewing the books and records. But that also means I know quite a lot about depreciation. Basically, when companies buy assets, they have to reflect the usage of those assets through their profit and loss statement, effectively giving them self-expenditure, claimable expenditure or deductible expenditure from their revenues to reflect themselves using those assets. Now, obviously, if you were to use those assets up faster and depreciate them over a smaller lifespan, it means you'd be putting more expenditure into your profit and loss, reducing those profits. So one way to increase your profits is, instead of spreading that asset out over just 3 years, to spread it out over 4, 5 or 6 years, basically making the expenditure in your profit and loss much smaller. Now obviously doing so is very frowned upon. It's not an accepted accounting practice or an accounting principle to massively understate your depreciation. In fact, as Michael Burry calls it, it's one of the more common frauds of the modern era. And he's saying that's exactly what these big magnificent 7 tech companies are doing. They used to spread their assets out over just 3 or 4 years, but now they're spreading them out not just over 4 or 5, but over 6 years each. As he said, this is a massive problem because all of these companies are massively increasing their capex spend, buying new chips every 1 or 2 or 3 years. So if they're actually using up their chips in just a year or 2, they shouldn't be making those chips in the books last 6 years. And he said by his estimates, that'll understate depreciation by $176 billion through 2026 to 2028. So by 2028, these companies like Oracle and Meta will be overstating their earnings, overstating their profits by 20% to 25 to 26% per year. That's obviously why he's taken his massive short position against Palantir and Nvidia. But he isn't the only person selling loads of Nvidia shares. In fact, as Kristen has tweeted, SoftBank is now out, as SoftBank has just sold its entire stake in Nvidia for $5.8 billion. What's even more interesting is the fact that SoftBank have said the reason why they sold Nvidia is because they desperately need cash for some of their other AI ventures like OpenAI. As I mentioned in one of my previous videos, OpenAI is desperate for cash. They only take in 14 or 15 billion per year, but they've committed to spend over $1 trillion. More and more the cracks in the AI system are starting to show, and it won't be long until everything comes crashing down. And what makes this even more worrying is the fact the Fed has just flagged hedge fund borrowing as a vulnerability in the financial system. That's because these hedge funds are massively over-leveraged. Right now, they're more leveraged than they've ever been, in the 99th percentile of leverage over the last 5 years. In the article, it says leverage among hedge funds is the highest it's been since regulators started tracking the data more than a decade ago. Now, you might be saying, well, Tom, why is that important? And it's important because when the market starts to drop, when the market starts crashing, things speed up fast. These leveraged positions that these hedge funds are holding start unwinding and unwinding quick as they get margin called. A hedge fund borrowing on a 10-to-1 basis only needs to see a drop of 10% in the value of the stocks they're holding, and it wipes out 100% of their portfolio due to leverage. And then those margin calls exacerbate the problem, dumping millions, if not billions of shares into the market at discounted prices, obviously, to resolve the margin call fast and get the margin call paid, dropping stocks lower and lower and lower. But as I mentioned at the start of the video, this is happening at perhaps the most interesting time, as President Trump has just announced that American citizens will receive a $2,000 tariff dividend. President Trump has said tariffs is making the US so much money that he wants to give back. He wants to send $2,000 to every American citizen, and any leftover cash will be used to pay down the US national debt. Now, as Practical Stocks has tweeted, this makes things very, very interesting, as the last time a stimulus check was received was back at the start of 2021, end of 2020, just as GameStop started sneezing. That's because the majority of the US population had this excess stimulus check to put into investments, and many people put it directly into AMC and GameStop. As Wired tweeted, he said that Trump is trying to create a Biden-like 2020-2021 market squeeze. He said everything that's happening on the macro is lining up for this. And that, of course, is Adam Aaron getting ready to pounce when stimulus checks come in and everyone uses their stimulus checks to buy more AMC and GameStop, causing another sneeze. Now, something to really spice things up, you'll remember in one of my previous videos, I mentioned all of the Citadel executives from the same department that were all leaving. And now, as Kristen has tweeted, another Citadel executive is out. Laura resigned as Citadel's head of BD for global equities after just 2 months on the job. And this is the exact same department, the BD Global Equities department, that everyone else had left from. This Laura was there at Citadel for just 2 months before leaving. She clearly saw something very, very sketchy. And finally for today, something the US should really implement, copying South Korea. As Kristen has tweeted, she said that South Korea continues to lead the crackdown on market manipulation, as now anyone caught committing market manipulation or manipulating stock markets now receives life in prison. This is a page from the book the US needs to take and absolutely copy. Obviously, we all know that right now the punishments for market manipulation in the US is just a small speed bump speeding ticket fine. Something like life imprisonment would really do the job in terms of deterring people from manipulating markets. Also guys, just a quick one, be sure to let me know what you think about LEXTF down in the comments below. I'm really interested to hear your thoughts. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to hit that notification bell, because that way you'll be alerted when I upload a new video. Cheers.